Welcome to the Deep Dive. This week, we're really putting the Johannesburg Stock Exchange under the microscope. Specifically, that upcoming flurry of activity, May 26th to 28th, 2025. We've gone through, well, a lot of info, particularly the JSE weekly outlook for this period.
Right.
And our aim is pretty simple, really. Give you the key insights you need to navigate the market movements and understand what's happening with company performance.
Exactly. It's a really interesting time, this intersection of major corporate earnings and some crucial economic data points.
Yeah.
Understanding how those two play off each other, that's going to be vital for investors this week.
Okay, let's unpack this then, just to get our bearings. The JSE All-Share Index finished up last Friday, May 23rd, at 93,528.74 points.
Decent level.
Yeah, and quite a bit of activity.
Yeah.
181.4 million shares traded, worth about our $16.7 billion.
Okay.
What was interesting, though, slightly more stocks went down than up.
Yeah.
But overall, the market felt pretty stable heading into this week.
Well, that slight dip, it often suggests a bit of caution from investors, like a holding pattern before these big announcements.
A deep breath before the plunge, maybe?
Something like that. Or maybe just waiting to see which way the wind blows after the data drops.
Right. So let's pivot to that economic calendar, because that's the backdrop for everything, isn't it?
Absolutely. Context is key.
Thursday, May 29th. That's the one to circle. We get the April Producer Price Index, the PPI data. Forecasts suggest 0.4% growth month on month. That's down a bit from 0.6% previously.
Okay.
And year-on-year, inflation is also expected to ease slightly, 0.3% from 0.5%.
And the PPI, measuring prices right at the factory gate, essentially. Yeah. It's a really useful indicator for what might be coming down the pipeline for consumer prices.
So a slowdown could be good news.
It could suggest that the relatively tame consumer inflation we've seen lately might stick around. Remember, April's CPI came in at 2.8% year on year, just a tiny bit up from March's 2.7%.
So the narrative seems to be like a stable price environment. Generally helpful for businesses, I'd imagine.
Usually, yeah. It makes planning easier.
Now let's zoom out a bit. The broader economy.
Yeah.
We saw 0.6% GDP growth in Q4 2024.
Yeah, strongest since mid-2023.
Driven by agriculture, trade, finance. Sounds like a positive tailwind, right?
It does provide some momentum, definitely. But you've got to balance that against, some ongoing headwinds.
Like unemployment.
Exactly. That, unfortunately, ticked up again, 32.9% in Q1 2025. And retail sales were a bit mixed, too, up 1.5% year-on-year in March, which is okay, but down 0.2% compared to February, so consumers might still be feeling the pinch a bit.
Right. Still, the Reserve Bank held the repo rate at 7.5%, down from 7.75% before that.
Yes, steady policy there.
And our international reserves hit a record high. So financially, things seem reasonably stable underneath.
That combination does suggest a supportive kind of underlying financial environment, yes. Which brings us to the big question this week.
How does all this translate into company results?
Precisely. How will these different signals, the good and the challenging, show up in the numbers? That's what we're digging into.
Okay, let's get straight into Monday, May 26th. Busy one. 5 big companies reporting.
Kicking things off with a bang.
First up, Altron. Now, this one's been getting a lot of attention. Called a standout performer. Sorts of significant investor excitement.
And you can see why. That share price jump 117% already this year. It's huge.
Yeah. And look at the forecast. Headline earnings per share, HEPS, from continuing operations, expected to jump between 68% and 75% compared to the restated 2024 figures.
Wow.
Basic earnings per share, EPS, also up significantly 59% to 66%. And for total operations, both HEPS and EPS are tipped to more than double.
That's a massive turnaround. Really impressive stuff.
And it's apparently down to successful restructuring efforts. When you look at their ongoing businesses, Netstar, FinTech, HealthTech, Digital Business Security, Document Solutions, Aero, they've all apparently shown strong double-digit growth in core profit metrics like EBITDA and operating profit, even though revenue growth was, low single digits.
That suggests really effective cost control and focusing on profitability, streamlining things.
Exactly. It points to those strategic changes really working. And Netstar hitting over 2 million subscribers with solid growth.
That's a key division showing strength. And the double-digit growth in FinTech and HealthTech, too, underscores momentum in those high-growth areas. They likely shed some less profitable parts and doubled down on tech.
Makes sense. Okay, next, on Monday, Barworld. industrial equipment and services. They're reporting interim results.
Right.
Now, given we just mentioned that 2.2% dip in manufacturing production month-on-month in March.
Yeah, investors will be keen to see how Barworld handled that. It's a good real-time indicator for the industrial sector's health.
Definitely. Then Pick and Pay. The story here is gradual recovery, right? After some major challenges. They have this comprehensive turnaround strategy.
And they put out that trading statement last week, May 22nd. Seemed to offer some encouraging signals.
Yeah, the numbers look much better. Basic loss per share expected to shrink dramatically, like 70% to 90%.
Huge improvement.
Which would mean a loss between 174.56 and 58.19 cents per share. Still a loss, but much smaller.
And headline loss per share?
Similar trend, down 55% to 75%. A loss between 77.49 and 43.05 cents suggests the changes are really starting to bite.
So what's driving that improvement?
Several things. Better trading profit in the main Pick and Pay stores, lower interest costs after the recapitalization, the rights offer, and spinning off Boxer.
Ah, yes, the Boxer listing.
Continued profit growth at Boxer itself, and much lower impairments this year compared to last, down from R$2.4 billion to about R$500 million.
That's significant. So even with consumer pressure still there, their internal moves are making a difference.
Seems like it. Really shows how company strategy matters, doesn't it?
Absolutely. A multi-pronged approach. Fix the core, grow Boxer, sort out the finances.
Okay, also reporting Monday, Foresight Holdings. They're in digital AI transformation solutions.
Hot sector.
Yeah, and apparently showing impressive momentum. Their recent half-year results had 20.1% revenue growth and nearly 33% operating profit growth.
Sounds strong. And the last one for Monday.
Pepkor Holdings, the specialty retailer. They're forecast to grow earnings by quite a bit, 24.4% annually. Analysts seem positive due to their diversified retail portfolio.
Right. Catering to different market segments probably gives them some resilience. Like Foresight, strong demand in their niche. Pepkor benefits from diversification.
Okay, that covers Monday. Let's look at Tuesday, May 27th. More mixed bag here. 6 companies, ALV and Exemplar, are reporting final results. But the main focus might be the AGMs, the annual general meetings.
Right. AngloGold, Ashanti, AECI, Brimston, Datatec, and Stock. AGMs are always good for getting insights from the top brass.
Definitely. Let's start with AngloGold Ashanti, premier gold miner, obviously.
Favorite.
And with gold prices being, well, elevated, and their focus on high-quality, long-life assets, their AGM insights are pretty crucial.
Yeah. What are they saying about production guidance, cost management, how they're spending their capital?
Especially when, overall mining production dipped year on year in March, even if it recovered month on month.
Exactly. Their perspective helps gauge the whole sector's health.
Then there's ATI, Chemicals and Mining Services, holding their AGM in what's called a challenging operating environment.
Linked to mining, so facing similar pressures.
Seems so. Navigating headwinds in the mining sector. Working on efficiency. So shareholders will want to hear about their strategy, any potential restructuring.
Makes sense. Their commentary tells you about the resilience of the mining support sector.
And lastly, for Tuesday's highlights, Datatec, International ICT Group, still on that transformation journey.
Streamlining, focusing on higher margins.
That's the idea. So the AGM should give an update on how those strategic moves are going and their view on market conditions globally.
Crucial in the fast-moving tech world, how are they positioning themselves for what's next?
Right. Okay, that takes us to Wednesday, May 28th.
Yeah.
Wrapping up the week with another strong lineup. 8 companies.
Busy finish.
Burstone and Raubex reporting final results. And then AGMs for Glencore, G-Fields, Coronat, Emira, Advtech, and TIG brands.
Quite a list. Some big names there.
Let's start with Glencore. Global commodities trading and mining giant. Their AGM is always a major event.
Huge implications.
You'll be listening for their views on commodity prices, production guidance, strategic initiatives. Their commentary often sheds light on wider market trends.
Especially with things like oil prices stabilizing, maybe some easing in U.S.-China trade stuff. Glencore's global view matters a lot.
Definitely carries weight. TIG brands, Tiger brands. That's a really significant one for South Africa, isn't it? One of the biggest food manufacturers.
Absolutely. A household name.
They've been dealing with various challenges, adapting to changing consumer tastes, economic pressures.
Yeah, it hasn't been easy for them.
But the stock has seen significant growth recently. So investors will be looking for, confirmation the turnaround is working. And what's the outlook?
Especially considering the strong performance of the agricultural sector that helped GDP growth earlier. Does that translate to better input costs or demand for Tiger brands?
Good point. Their AGM should give a sense of consumer sentiment in the food sector, too. Pricing power, costs, innovation.
All key questions for them.
And lastly, for Wednesday's preview, Advtech, the private education provider, generally seen as a pretty resilient sector.
Usually holds up relatively well.
So their AGM will likely cover things like enrollment trends, expansion plans, and how the economy is impacting demand for private schooling.
Yeah, it's a good indicator of household spending priorities and confidence, too.
Okay, so stepping back again, let's look at the broader context influencing all this. There seems to be, well, maybe renewed economic optimism.
There's definitely been a shift in sentiment, hasn't there? The formation of the government of national unity seems to have reduced perceived downside risks quite significantly.
And economists are more bullish now, projecting maybe 2% GDP growth for 2025.
Yeah, that's the talk. Supported by agricultural recovery, potential interest rate cuts down the line, it's a more positive outlook than we've had for a while.
We also saw the appointment of Patrick Delaminy as the new CEO of the PIC, the Public Investment Corporation, managing over R3 trillion.
Huge portfolio.
That could lead to shifts in investment flows, couldn't it? Impacting sectors like infrastructure, development finance, sustainable stuff.
Absolutely. Given the PIC's scale, any changes in their investment strategy under new leadership will definitely be watched closely by the market.
And finally, SARS, the revenue service. They're committed to improved revenue collection. Got a big target for 2025-26.
$1.986 trillion. Ambitious.
Yeah, and this is happening even as nominal GDP forecasts were revised down slightly, and real growth expectations are around 1.5%.
It underscores the pressure, doesn't it? Companies need to be efficient and profitable to contribute to that tax base in a, well, challenging but maybe stabilizing environment.
So, if we pull all this together, what are the main themes emerging for this week?
Well, first, I think technology sector resilience is clear. Altron is the poster child, isn't it? That turnaround, the growth.
Yeah, 117% share price growth, the HPSIP jump. It shows successful digital transformation is possible here. And the PMI data improving slightly backs that up, too.
Right. It highlights the potential for innovation and growth in the SA tech space. Strategy and execution paying off.
Okay, theme 2, maybe retail sector gradual recovery.
I think so. PIC Ian Pay's improving numbers, even with consumer pressure, suggest turnaround plans can work. It's not all about the macro environment. Internal factors matter hugely.
Even if the overall retail sales data is still a bit patchy.
Exactly. Company-specific strategy can overcome some broader headwinds.
Third theme, mining sector performance. Watching AngloGold and Glencore closely.
Definitely. They're key indicators for commodity markets, how the sector's handling production issues. They're bellwethers for the whole economy, really.
And finally, industrial and services sector insights. Companies like Barworld giving us a feel for the broader recovery pace.
Yeah, especially with that recent weakness in manufacturing, understanding these diverse sectors helps build the full picture.
So this week feels like a really crucial checkpoint for the JSE, doesn't it?
It really does. You've got this mix of companies reporting against the backdrop of key economic data.
And that PPI data on Thursday, combined with all the company news, it should give us a much clearer view of both the big picture and the company-specific details.
A proper macro and micro snapshot.
And the overall backdrop, slightly better inflation, stable rates, improved political outlook, it seems, well, maybe more favorable for companies.
It certainly sets the stage for potentially better news, maybe some positive surprises in earnings or outlooks.
So the key thing for you, the listener, is probably paying close attention to management commentary, right?
Absolutely. What are they saying about the future?
The combination of the results, the AGMs, the economic data, it's a great chance to assess past performance and future strategies.
Especially in the context of what look like improving economic fundamentals.
It feels like the South African market, despite everything, continues to offer opportunities if you focus on, fundamental quality and good management.
Precisely. Look beyond the short-term noise. Focus on business quality and execution.
We'll definitely be back soon to follow up on all this, analyze the actual announcements as they happen, and see what it all means.
Looking forward to it. And for you, our listener, maybe something to think about. How does this complex dance between global commodity prices, our own domestic economic policies, and the specific strategies of individual companies create both the opportunities and the risks here in the South African market? And maybe think about what other indicators, beyond just the earnings numbers, might give you deeper clues about long-term success.